Welcome back to the Money Under the Mattress podcast. My name is Mitch and my co-host is Jake. And today we are joined by Phillip Martinelli. Phillip is the founder of Basilicata as well as a writer on Seeking Alpha. He graduated from Boston University where he majored in economics and now has a passion for shorting, which I'm sure we'll discuss later on. We're stoked to get him on today to talk about Workhorse, Lordstown Motors, as well as discuss VIEs. So thank you for coming on today with us, Phillip.
No problem. Glad I can be talking to you guys.
Yeah. How long ago? Was it 2 days ago that we got off a phone call?
Yeah.
Yeah.
It
We
was
talked.
Monday, Sunday. I don't know.
Yeah.
Cool.
Something like that. And we talked for about an hour and a half about a couple of different things. And we've realized that we're a lot more in common than I thought. I definitely thought we were. Just starting off, like you were a little bit of an entrepreneur and stuff like that in high school and in college, and similar to me and Jake. So yeah, it's definitely gonna be an interesting podcast for us today. I guess I'll go off on the first question. This is usually the question we like to ask a lot of our guests that we have on lately, and it's, how did you get started in investing?
So, I feel like there's always two groups of people whenever someone gets asked this. There's the people who've been doing it their whole lives, and there's the people who like discovered it in college. I fall into the former camp. So like one of my earliest memories as like a child is like waking up on a Sunday morning, getting a copy of the Chicago Tribune. My dad would obviously grab it, and we'd sit down on the couch and we'd just go through every single ticker in the newspaper, because like they only used to print it on Sundays or whatever. So we'd go through every single ticker. I'd pretty much have them all memorized. You know what I mean? Just doing it week after week after week. You'd see what the prices are doing, and then we'd talk about what the companies are. So like that's pretty much like how I got started, and he highly encouraged me to start investing, like even at a very young age. So I must have been like 7 years old. I made my first purchase. It was Marvel Entertainment, and I loved the movies. I was sitting in a meeting with these. They were pretty old. They were about 75 years old or something like that. They were telling me how they bought their like first shares of Marvel Entertainment at like 2 cents or something. I'm sure it wasn't that low, but it was that low. And they were explaining how they owned that stock and they became like multi-millionaires. So that was the first one that I purchased and have never looked back.
That seems like the youngest I've seen or heard of is 7 years old. Before that, I might have heard somebody say that they were like 12, 13 when they started,
like 11.
11. I know Andrew Kuhn from Focus Compound, he started at a really young age reading 10Ks.
That's amazing.
But yeah, like 7 years old. I mean, I've never heard that. And when I was 7 years old.
It's a shame that much experience hasn't done me that well, but it was that young.
Yeah. So you said that you initially invested in Marvel, and what was the other business, sorry?
GameStop.
And GameStop. Would have been nice if you kept on the GameStop.
Yeah. I like half calculated out one time. It was like, if I had never sold my shares, I would have like doubled the market return if I just held them for 20 years or whatever. But
would have been a tough hold though.
Yeah, it would have been a tough hold. Yeah.
Yeah. What and who has influenced your investing style the most, would you say?
So I'll answer that in two ways. Number one, I honestly think like I was one of those kids, like I was given a copy of The Intelligent Investor and I read it over and over and over again. And I was just like dyed in the wool value investor. And like looking back on that, now I think as I've grown, I've learned that like I was probably simplifying it too much, but like that experience definitely influenced me the most. And I don't think it was good for me. People with this like religious focus, whether it be on book value or price to earnings or, whatever it may be, I think that in my mind is pretty much a mistake, but that's how I really got into things. Now, on the opposite side of things, I think that the two investors that have influenced me the most are Joel Greenblatt and Bill Miller. I think both of them are just like straight up geniuses. They've crushed the market year in and year out, which is like unheard of. And I've tried to emulate them as much as I can, but I think I still have a pretty long way to go, obviously.
So when 13Fs are coming out, are you kind of tracking what their portfolios are doing, or?
So Joel Greenblatt has like shifted to just being, I call him a closet indexer. So, and I love it. I love it. Like what he does, like, he's just like, I'm going to go through, and I think he has like a whole tech team. They go through like, 1,000, 2,000 stocks, or maybe it's 500. And they're just like, here's the intrinsic value. Here's what it trades at today. And they just, this one gets 1%, this one gets 1.5% based upon what they think the forward return is going to be. So like Joel Greenblatt's 13Fs, from my perspective, I think are useless. Bill Miller's, I do look at. He has like several different like portfolio strategies he runs with his new company. So like I don't look at his 13Fs as much, but when I hear him say something, I listen intently. So like he was on, I forget what her name is. Oh God. But he was on someone's podcast recently, and I think he had 3 pitches. One was JP Morgan. He was like, you could own that business forever. It's super cheap. It's growing, high quality business. He was like, you put 50% of your portfolio in it. The next one was Teva Pharmaceutical. I had owned that in the past for pretty much his thesis and gotten burned on it. So I wasn't willing to go back to that one. And the third one was ADT, the security company. And I think like right after he recommended that publicly, I think it went up like 50% in a day almost, because they announced, I think, a partnership with Google or something like that. And the fourth stock, which I actually traded based off his recommendation, was Williams Lyons Homes, which was like, I think, an over-levered home builder back about 5 years ago. They got bought out, but he went out there, said, hey, the P is like 4. It's not a bad business. Go buy it. I did. And I think like within like 2 weeks, I made 100% on my money. So that guy, I think both of them are very just down to earth, optimistic investors. And, I think everyone would do well to listen to what they say, whether it be stock specific or just in general.
What's your thoughts on Bill Miller's bullishness on Bitcoin?
I mean, I feel like his argument and everyone else's argument, like Chamath's or anyone else, it's always just like, schmuck insurance. It's like this, like on face value is probably like worthless. But especially when he was buying back when it was so cheap, it was like, but if everyone else thinks it's not worthless, it's worth a lot. So, I mean, like that from a fundamental perspective, right? I mean, it makes a whole lot of sense. It's just like you have a product that other people want, they're going to pay more money for it. In my opinion, though, on crypto, I don't think any of it's sustainable at all. Like at the end of the day, I think they're just essentially going to be replaced by central bank currencies for the most part, because I don't see how it should be legal that you can just transfer assets, you could be sending assets to like Osama bin Laden, or like skirting, securities laws and shipping money to Venezuela or something. Like you can just do whatever you want. So I don't really, I feel like that's a loophole. And I mean, maybe over time things will change, but for now, I don't think like fundamentally it really makes sense.
Yeah, I mean, it's the currency for illegal items. Like if you ever want to go buy something off the black web, I believe that's the only thing you can buy it with is with Bitcoin or Ethereum.
Yeah, and people will try to use it for certain things, but at least under US tax jurisdiction, it's like treated as an asset, not as a currency. So when you sell it, you have to pay gains, which no one does. But there are a lot of legitimate uses for it. But like people have like ran the numbers, and like using Bitcoin or Ethereum, I don't think it's like more efficient than just like using Visa or MasterCard. And even if you are bullish on Bitcoin or Ethereum, or I mean, crypto in general, in the blockchain, like why that and why not a central bank, cryptocurrency? That I really can't find my way around that argument. So pretty bearish on crypto, to be honest, especially because Tether, do you guys know about Tether?
I'm not familiar with that, no.
You guys are going to have to get, I think his name's Bennett Tomlin on and have him talk to you guys about crypto, because there's some shady guys like literally printing money that everyone's using to buy Bitcoin and bid the price up, and just some crazy stuff going on with that. So,
So he's against Bitcoin and stuff, or is he for Bitcoin?
I don't know what his position is on Bitcoin or crypto in general. He is someone who's like highly, kind of like me, like he just is like super interested in finding these people who are committing fraud. And he's like literally dedicated, got to be over a year of his life to this now, maybe 2. Super smart guy, knows the full backstory on everything that's going on in the crypto market. So I don't know his opinion on like, where things will go in the future, but for this specific piece of it, he's got him dead to rights that, they're committing fraud.
What I never got about crypto and people saying that it was gonna, be our new currency that we all use was, if let's say you had, $20 in crypto one day and you need to go out and buy groceries, and the next day it was worth $10, you'd be kind of messed up there, right?
Yeah. I mean, that's, part of the thing is that the price volatility pretty much means you can't actually use it as a currency. It's an asset, even though it's called a cryptocurrency, at least for Bitcoin, right? So,
Yeah. And I think the SEC hasn't really regulated a lot of the cryptocurrencies or even any of them that I've heard of. There's been so much like scamming going on within like these smaller, like they call them shit coins. Like just like even like the influencer space, if you guys pay attention to that, like, if you have 1 million followers on Twitter, you could easily just get kind of looped into some type of crypto scam, post it, make 50 grand off doing a pump and dump, and then the SEC doesn't look at you because you're not that big right now. But as they get bigger and bigger, there's a lot of people that have started falling off just in the influencer space, and then they have the risk of potentially like either getting fined or jail time. So that's why I just don't really kind of mess with that. And I think just the stock market's a lot more regulated, and it's something that I'm able to actually value.
yeah, I agree wholeheartedly. I think over time, people's perceptions of Bitcoin may change, but what the fuck do I know? So,
Yeah. Basically.
Yeah, same with me. But yeah, you've had a write up on Workhorse on Seeking Alpha. I read it a couple days ago and really enjoyed it. And you were talking to me on the phone call that we had the other day, is that you are shorting Workhorse. Would you like to discuss your thesis around that?
yeah, I am shorting it again. All right, so I'm trying to think of how I structured this story. So like, I'll say that there's like 2 people in the entire world, along with myself, who've like probably spent more time analyzing the company known as Workhorse. One of them is Fuzzy Panda, who's a somewhat famous short seller, super smart guy. Actually went there and visited and was like, wrote a short report after visiting. He was like, why would they let me in and see that they don't have anything? Doesn't make sense. But there's another guy whose name's Canada Man. It's like this no-name guy on Twitter, and he literally knows more than everyone else about the company. So other than them 2, I'm like the 3rd guy. So I don't know how I found out about the company, but essentially it was during, their stock price was at like 50 cents, $1, $2 for years and years. They're just selling shares into the open market because they're a total shitco. You know what I mean? They've never really been able to produce electric vehicles. And all of a sudden the electric vehicle, halcyon days come, right? Where every electric vehicle company on earth gets bid up 10, 15, 20 times. And all of a sudden their stock goes from, $2 to $20. So at some point this catches my eye and I start looking into the company. And it's almost like they were so under the radar that no one really knew or cared. But like, when I started to do like my fundamental research on the company, like they don't really have revenue. They don't really deliver any electric vehicles, although they've been in business for, I'm going to say, over a decade. They like essentially, I would classify them as like not a pump and dump, but like a stock scheme, like just sell a whole lot of stock and management's going to get good bonuses and they're going to sell their own shares that they're getting into the open market. But like essentially this was a company that like took over Legacy Workhorse, which was like a GM chassis company. And their whole thing was that they were going to win a US Postal Service contract that, let's just say, was worth about 10 to 50 billion dollars of producing vehicles for the Postal Service, and they were supposed to win it. Now, here's the problem with that thesis. All of a sudden on the internet, you started to see these headlines getting pumped out that they might win this contract, where there was like 6 competitors and then it went down to 3. All these stories just started getting put out, and it seemed like someone was paying people to put these stories out. So let's put that aside for a second, that there seemed to be, a little bit of, I don't know if it's fraud you want to call it, pump and dump scheme maybe, but someone was doing something to kind of pump this stock. But at the end of the day, this company was supposed to win this Postal Service contract. They really couldn't produce any vehicles. They had like one factory, I think in Union City, Indiana, that made chassis. It had absolutely no like manufacturing equipment to automate anything. So like you're literally thinking about guys standing around hand assembling a truck like it's the year like 1890 or something. You know what I mean? Like this is literally a company that in no way, shape, or form could ever produce tens of thousands of vehicles for the Postal Service. And yet headline after headline just kept saying that they were going to win this contract, including investment banks like Roth Capital, who, was putting their price targets like $37 or whatever it was, based on the fact that they might win. Now, if you listen to some of the earning calls, they couldn't even buy the batteries for these electric trucks. They couldn't produce them. They were producing like 3 a quarter. It was an absolute shit show, like from top to bottom, just a horribly run company that had no business really even being public. Now that's obvious to everyone. That has nothing to do with me. I went the extra step a little bit, and I FOIA'd the United States Postal Service, and I found out that they never even communicated with Workhorse, at least in the past 6 months, from like July to December of 2020. So I FOIA'd them. I found that out, and I was like, there's literally no way that a company could win like a $10 billion contract with the United States Postal Service when they haven't had a single email communication with the other company. You know what I mean? Like it literally can't work like that. So at the end of the day, that was my smoking gun. I knew from top to bottom that they had absolutely no ability to produce those trucks. But for me, that was like, the thing where I was like, okay, this company's trading at like a $3 billion market cap. They're apparently not in communication with the government about the contract. There's a 0 probability they're going to win. So, present me with those odds and you know what I'm going to do with it.
Exactly, yeah. Do you know how many employees that they had on at the time?
I just read this recently because they're actually ramping up their staff, because I think they actually are delivering a little bit more trucks. But I want to say that I'm just going to say like 400, 500, maybe they're at 1,000 right now. It's not a very large company.
And is that even possible, even like a 1,000-person staff? Would that even be possible because they were supposed to produce, what was it, 40 or 50,000?
A large number.
Yeah.
It might have even been 100,000. I don't even know. I don't remember at this point.
Would they have even been able, like, would that have even been a possibility for each employee technically to be making 100 cars? So they're making, they're making a vehicle every 3 days.
Now, granted, if they were to have won the contract, there would probably be some stipulations in there that they would get some sort of advanced funding, or some banking partners based upon the contract would fund them, and they'd ramp up and staff up, right? And really fill out these factories and make it all happen. And everyone would sing Kumbaya. Like, so I get it. Like technically maybe it was possible if they had won that they could have done all this. But you're talking about a company that like essentially had to switch its battery supplier in 2020. And it's like, you guys can't even buy batteries. You can't deliver these cars. You know what I mean? They're fundamentally bad operators. So even if they had one, there's no way they would have been able to produce it.
Yeah, and I mean, even if they're run by bad management or bad operators, that weren't really understanding or just like saying a bunch of stuff in the news just to pop the price of the stock, they're obviously not really concerned about the actual fundamental business. So let's say even if they did win the contract, this is what kind of as I've researched a little bit. So even if they did win the contract, then it's just all based on, so you're just throwing a bunch of money at this management team that's not that great. And so, I mean, it doesn't take a genius to figure out that if you have a bad management team, what are the odds that this whole thing's not going to work out? I mean, the odds are definitely in your favor, just for the fact that the percentage that they were even going to win the contract is pretty well close to zero. If you haven't talked to somebody in 6 months, then most of the time you're not going to make a deal with them.
Yeah. And the other thing is that Workhorse entry into the competitive bid process, they weren't even what's called like a prime contractor, or, I'll say that that's my language, but they actually partnered with, I think, a Singaporean company called VT Hackney, and they were the prime contractor. Workhorse was a subcontractor for them. And essentially VT Hackney was like, essentially, we're not going to win this contract. We withdraw. So Workhorse bought the rights to the contract to bid on it and the intellectual property to it to continue the effort. So there was many signs that they were not going to win at all. You know what I mean? Which Fuzzy Panda documented many times. So it was a cut and dry case that nothing was going to happen. And even if they had one, it would have gone horribly.
Yeah.
So you had bought and puts on them, correct?
Yes.
And how far out were the puts bought for?
It depended. So, I mean,
you layered it?
Yeah. So I had been shorting them for a while, before I did a FOIA, before, you know what I mean? And I'm going to say I started in Q3, Q4 of 2020. I don't even remember at this point. So yeah, I was taking a layering approach, trying to play things as I could, but some of them were short dated. Some of them were well into 2021. The Postal Service said that they were going to award the contract by the end of 2020. So for a long time, I was just put a bunch of money that the contract was going to get announced and they were going to lose in 2020. Then it got delayed. And that for me totally ruined my confidence, right? Because if you're buying put options and there's literally an expiry date and all of a sudden it's okay to move back that contract date, that totally changed my strategy. And for me, where I had been once extremely concentrated and extremely confident in myself, it was hard for me to play that knowing that the US Postal Service could just push it back another 3 months, push it back another 6 months. You know what I mean? It's I knew they were going to lose, but I didn't know when it was going to be announced. So it was really hard for me to actually figure out a profitable trade because of that.
Interesting. When we were on our conversation the other day, you discussed Lordstown Motors, which is something that I was unfamiliar with. I've never heard about them. Would you like to discuss a little bit about that thesis?
Yeah, I mean, they're almost one and the same. So I'll try and make this the 2-minute version because I just went on a rant about Workhorse. But essentially, I think the founder of Lordstown is the founder of Workhorse. This guy named Steve Burns, kind of a shady character, not a great history, not a great operator. And he comes out with this SPAC that Workhorse was actually, I think, an investor in or owned 10% of, because essentially Workhorse back in the day was supposed to make this electric pickup truck that never happened. So they, I think, sold the intellectual property rights to Lordstown and in return got shares or warrants back you know what I mean, for the SPAC. So Lordstown's run by this guy who says that they're going to produce this electric pickup truck at a facility in Lordstown, which had been kind of gifted to them by GM. Now you open up the 10K to Lordstown and you see that their CapEx projections are like under the maintenance CapEx for Ford and GM. So it's like, okay, right off the bat, this is a company that in no way, shape or form is putting out estimates to the public that are even remotely close to what reality would be to produce an electric truck at full rate production. And then the second thing that immediately hit me was I came from a manufacturing background at Northrop Grumman. They said that they were going to produce the prototypes and like move to full production within 6 months. That's essentially not possible. If you work in a manufacturing environment and you're making a new product, especially one where it's like an electric truck, where there's a lot of, suppliers contributing different parts, new technology, there is going to be a significant amount of like redesign. So that means new parts drawings are going to have to occur. Your engineers are going to have to literally make new parts, redesign them. Those are going to have to go out to suppliers who are going to have to retool their factories. They're going to have to order the parts just to make the new production of that part. Then they're going to have to ship it back to you. So like literally if any significant change happens to the prototype drawing, there's going to be just months and months of delays. And like you just look at them and their SPAC and their S1 and putting out these projections, like it's not possible. And sure enough, at this point, it's kind of all been said and done, but stock's at like $7. So it's trading under, the $10 initial SPAC price. And they're being investigated by the Department of Justice for essentially lying because they said they had like firm orders and they absolutely did not have firm orders for the pickup truck. So that one is already a bit like retrospect in terms of like, it's in my mind, it's kind of said and done. That I don't know what's going to happen to that company, but it's not going to be success.
What's the type of compensation that these management teams are getting? Have you looked much into that?
I don't know. I mean, in Workhorse's case, they were significant sellers of their own stock. I can't blame them. They owned a bunch of stock and people bid it up to insane prices. So, sell it in the public markets. But then again, if you know that you have no chance in hell of winning this contract because the U.S. Postal Service wants nothing to do with you, is that legal? Is that right? Is it ethical? Not quite sure. But I mean, before the EV SPAC mania craze, I'm sure they were taking in a lot less. But, during it and now, I'm sure a lot of the senior management's bringing in 8 figures, a year.
Okay. Because usually when you see this type of stuff, especially with SPACs, what they will kind of do is that they'll go out, raise some capital, make an initial investment, but not put 100% of the actual capital that they received into a business. So they'll put a portion of it, and then they'll keep that. Let's say if they invested 80% of their capital they had, they'll leave that 20% to themselves. So then they'll just have a payday off that. And then if the SPAC, if the company that they own goes up, then they'll just take chunks of money out of that, like the dividends from that. And if it goes down, then they just raised a bunch of equity and got 20% for it as compensation. So that's one of the things I think that SEC has been kind of trying to regulate lately. I'm not 100% sure, but I believe that's kind of like what the whole purpose of not allowing Bill Ackman to go through with the UMG deal, because it wasn't 100% of the actual capital. And so they wanted to make sure that he wasn't just going to run away with a bunch of money.
Yeah, what they did to him, I think, is very complex. Like he kind of wanted to make a SPAC, a permanent capital vehicle. I'm really not the expert in this.
No.
And they were kind of worried about it. Now, I get it, because on principle, let's just say 90% of the people doing SPACs are probably people you wouldn't want to have permanent capital vehicles. And then there's him, and it's probably okay. But yeah, they're really cracking down right now. So I think that things are going to be changing pretty quickly in terms of the forecasts that these companies put out and them being a lot more based in reality. And, you know, I think there's going to be a lot more rigor around it because they really do seem to be cracking down.
Do you think there's an end to SPAC mania, or do you think SPACs will just be a part of the market now? Do you think, right? Like, I mean, it seems like almost every week there's some new celebrity or some sorts that are getting behind some type of SPAC. And a lot of it has kind of turned fraudulent or scummy or whatever you might like. You don't hear a lot of like great stories coming from a SPAC nowadays.
Yeah. So here's my opinion on it. Despite like all the bad things that have happened with SPACs and just like tons of known frauds being out there, right? I think that over time, they will actually be a really great vehicle for really great management teams. People are going to build a brand on doing good. To a certain extent, there's a guy named Bill Foley who's been doing this for years, and he's had great returns for the most part. I think he's very well trusted. And like, I think that that's going to be, you know, something that kind of occurs. And it's kind of like what Chamath's trying to do. I'll reserve my judgment, but like, I think there's kind of going to be like families of SPACs where there's going to be people you can trust to deploy your capital wisely. And this is going to be your chance to get in kind of at like the pre-IPO price. So to be honest, I think that SPACs have been a really great innovation in the market. But you really do have to be, you know, very conservative about things. Like you don't want to buy into the hype about, you know, the SPAC that says they have, you guys heard about this? I think it's called View. It's like smart windows or something like that. And I don't even know if the technology exists or whatever, but like people are making crazy claims and like, you just shouldn't be investing in things like that, in my opinion.
No,
No,
you go, Jake.
Earlier, you kind of mentioned that you run a pretty concentrated portfolio. Do you kind of want to like go over how concentrated you run? Like, what's your position sizing, especially like starting out with starter positions?
Yeah, so I think starter positions are great. I don't really think there's any downside to them statistically. Like, they're really not going to affect your book. So like when I heard about that concept, I was a fan of it. So, but I will tell you guys, I did not run concentrated for my entire investing career. And I think that was one of the problems that I did have is that I was spreading money out everywhere. I had literally probably over 100 positions, and some of my highest conviction ones were the best. And I had like not enough money in them. So over time, I have learned that when you really know something and you really think that it's a low downside, high upside probability, you really want to deploy more capital to it. And that seems obvious for everyone, but it's a hard thing to do. So like, I'll tell you, I'm 20% invested. I have two accounts, but one account, 20% invested in Sweetest Match. I've been invested in that since like 2019, 2018, something like that. So I'm a semi long-term holder of the stock. But yeah, I'm willing to go now. Amazon, I think, is 15. Northrop Grumman's like 15. JP Morgan, 15. So now I'm pretty willing to, you know, really become concentrated in some of the stocks I think are going to have better returns. That's something I've learned. I'm sure once I get burned, I'll regret this, and you know, you guys can call me out on it. But for now, I really do think that there's, you know, if you're right, you're right, and you should, you know, put your money where your mouth is.
Yeah, that's kind of what me and Jake have always really, almost since we really started getting into like the whole fundamental analysis and looking at the fundamentals of a business, is that we kind of had this liking, and we've read multiple books on concentration and keeping concentrated portfolio and the importance of it. But yeah, we never had to deal with having even, I don't think I've even owned more than 10 stocks, individual companies. Like right now, I'm 5 holdings, I think. And Jake, are you 6?
I'm 6 or 7 right now, I think.
6 or 7. So
You guys are nuts.
so yeah, it's just one of those things that I think like not a lot of people are doing. So it's pretty interesting to see that, like if you have 4 businesses plus you have a little bit of puts and stuff like that. So It's
Mhm.
you don't see it a lot, so congrats on the concentrated portfolio. Keep it up.
Yeah. Well, I mean, from my perspective, I'm like decently concentrated. You guys run a concentrated portfolio. That's pretty impressive, especially given, where you guys have most of your money in, or your number one position. So
Yeah, number one positions in pretty skeptical business that's been up in the air lately. As most of the listeners probably know, it's Alibaba. Jake and I both own just around 30% position in Alibaba. We don't own 30% of Alibaba, but our position size is 30% in our own portfolio. But yeah, you kind of have your own opinions on VIEs, which are variable interest entities, which if anybody doesn't understand that, just a quick Google search, you'll be able to understand what a VIE is. Do you want to discuss some of your thoughts on VIEs?
yeah. So I've been like a long-term skeptic of VIEs, and it's definitely felt good the past 2 days because like I've been skeptical for a long time, and to a certain extent seems to be proving right a little bit. But I will say I'm long Baba a little bit, kind of as my schmuck insurance, because if everything pans out and I'm wrong, you got to buy that company because what is it trading at, especially after it just fell such a significant portion, like 7 times forward earnings. I don't know.
It's something ridiculous. Yeah.
Yeah, it's something ridiculously low, and I don't believe the accounting, but based on the accounting, it's something ridiculously low. But as it relates to VIEs, this is something that I quite honestly do not know how it exists. It shouldn't exist, in my opinion. It is essentially something that I think, it's like the natural optimism, the natural hope of people that has gotten taken advantage of. So like quick rundown, like if you own most of the Chinese, tech companies are actually, you don't own them, you own a Cayman Islands company, which has issued the shares, into the market. And that Cayman Islands company doesn't own Alibaba assets. They don't own assets, liabilities, anything. They have signed a contract with Alibaba that essentially like they pledge the earnings, or some sort of arrangement where it's almost like a flow through entity. So why does that happen? Well, if you're like an entity like Alibaba, or maybe some more tech focused or communication focused ones, like the Chinese government, and I'm not the expert on this, to a certain extent, there are laws prohibiting the ownership of assets, of certain strategic assets, by foreigners. So like if you're Alibaba, you can't just go and list Alibaba assets on the US exchange because you're an internet company and that's not legal. But if you pledge your earnings to a Cayman Islands company, that's legal, kinda. And then that company can go public for you. So it's this very strange arrangement in my mind where the Chinese government has essentially said, like, if you're a strategically important company or you're in a sensitive industry, we don't want you being owned by foreigners. And everyone's used these loopholes to essentially do that. So like, yeah, I mean, that's the situation today. And to me, it just seems very obvious why you wouldn't want to own those like VIE structures, because in my opinion, the Chinese government has said, this is what we want. And everyone's doing exactly what they don't want. And you'd have to assume at some point they're going to try and crack down on them. Now, counterpoint, why would they want to upset the apple cart? Why would they want to piss everyone off and ruin the VIE structure? You really think they're going to, let's say, like, quote unquote, nationalize Baba and ruin $500 billion of international wealth for everyone in the world and piss everyone off? Yeah, I do think that's hard to believe, right? I totally understand that viewpoint. But at the same time, humans are like historically bad at understanding tail risk, whether that be right-sided or left-sided. And I think that like one of the prominent scenarios is that VIEs go to zero. And it's very hard for me, despite the fact that, things are so attractive and you might make a 5x return. It's very hard for me personally to put my money in something that has a big goose egg. So that's my opinion on them.
Yeah, to kind of go off that point, like a lot of things I do agree with. Like, I mean, it is correct that VI, or technically, like, we're not allowed to be owning a Chinese internet company as China law, but through the Cayman Islands, then there kind of is some type of like loophole, what you'd call it. So technically it's legal, but technically, if you look at it, it could be illegal as well.
Mhm.
And then like some scenarios that I've looked at is there's a lot of different laws that is illegal in China, but they don't actually regulate and don't step down on. So like there's like some same-sex laws that they is technically illegal in parts of China or all of China. I'm not 100% sure on, so I won't go too far into it. But there's laws around that, but they don't step in on it. They don't put people away or anything like that. And there's no fines. It's like it's similar to laws like underage drinking to a degree. Like it's illegal, but like it all depends on the officer that kind of stops the party.
Yeah, it's like weed in the United States.
Exactly.
Kinda
Yeah.
illegal, kind of not legal.
Right. So it's one of those things that it is definitely illegal, but are they going to crack down on it? Do they care that much? Are they willing to piss people off that much? And what is the benefit to cracking down on it?
Yeah.
So it's all a push pull. I do like the way I talked about it on Twitter today is yes, I think people are very biased when they are a bull, when they're long Bubba, and they say there's no business risks. I think that's like sort of offend anybody, like almost idiotic. There's 71 pages on the 20F of risks. So there's got to be at least one business risk on there that is true. I don't, so I'm not part of that thesis. I'm like, yeah, there's business risks with Alibaba. There is risks with Alibaba for being a Chinese business, as well as owning a Chinese business that is, like we said, an internet company. So yeah, I do think that they should trade at a discount to what they would if they were a US business. Excuse me. But I believe, this is my point of view, I believe that there is now been, that risk has already been priced in, and it's now significantly lower than it really should be.
Mm-hmm.
Yeah, like I personally think that, I mean, besides it going to zero, like you said, in an Armageddon situation, like it just gets wiped out, the business going forward doesn't have to do a whole lot of impossible things to get a good return, I guess you could say. And that's my kind of view on it. So if you kind of think about what's the worst case scenario, it could go to zero. But what are the chances of that going to zero? I don't put that as a super high probability. It's still a probability, but it's not super high. So that's the way I'm kind of looking at it right now.
Yeah. And I agree with that assessment. And Mitch, to your point about it being priced in, it's been selling off, I think, for the past 6 months, but it's especially taking up speed the past couple of days. I said I was long, very small amount. But I do think, like, in my opinion, maybe the market's realizing some of these risks, but like, in my opinion, I don't think much has changed in terms of the risks. Like, the risk to me is, let's just say the US kicks Alibaba and a lot of the Chinese companies that don't submit to covered audits off the exchange. And that's how China retaliates. For option two, China invades Taiwan and everyone loses their money. Barring those two options, like if we just bet on peace, if we bet on cooler heads prevailing in certain situations, it's, the more and more the price falls, the more and more attractive it gets, under that blue sky scenario. So I definitely see things both ways. I think it's way too risky for me to put any significant amount of capital in, which is why I actually play it via leaps. But yeah, I agree with you guys and I disagree. So
That's kind of our side too.
we'll see. We'll see what happens. We'll circle back.
Exactly.
5 years down the road. But I think though that a lot of investors don't realize that there's a lot of risks outside of China to begin with investing. Like even in America, there could be a lot of things happen that we don't see coming. Things worse than COVID, World War III, nuclear threats, like just stuff like that that people don't realize could happen. So you can't always think of the worst case situation and say, that's going to happen type of thing.
Right. Probably won't be what you think it'll be. And you're right in saying that. Yeah.
That, and almost to go off, like I'm not sure how long ago that one would have been a little longer tweet. Must have been a couple months ago, but I talked about. I think that the actual political risk with China, with Baba, I don't think that's the big risk. I think there's going to be a bigger risk that nobody has even foreseen yet.
Mm-hmm.
And I don't think the big risk is political risk. I think there's going to be a hidden risk that nobody knows about and nobody can foresee, such as a COVID or whatever it may be.
Yeah, there's a lot of them. I can think of a couple, but when it comes to Alibaba, and this is Alibaba specific, not VIEs, but some of it scares me in the fact that, so like I always tell this to people and no one gives a shit. But I tell them, I'm like, when Alibaba owned Ant Financial and it owned 100% of it, Jack Ma took Ant Financial and he literally carved it out of the company. And he essentially sold it to himself and a couple other people and just did that. Now, at that time, Alibaba was a company and it was owned by SoftBank. It was owned by Yahoo, right? So it had all these shareholders and he sold it to himself for a price. And those shareholders found out 2 weeks later. And then Ant Financial grew and became this giant behemoth in China worth, let's just say $500 billion. Now, everyone today thinks that it's impossible for something like that to happen. But, you look at a company like H&A Group, which just went on this debt-fueled acquisition spree and bought like a microelectronics company in California. It bought one of the biggest air leasing companies in Ireland, bought hotels in America. It was just doing all this buying with debt. And I think what ended up happening is that the equity got redistributed. Now, I don't know if it was a public company in China. I don't believe it was a publicly listed company anywhere else. But I think people overlook the fact that things get carved up and redistributed a little bit more than anyone wants to admit. Because I think the same thing just happened to Ant Financial too, where they actually clawed back Jack Ma's equity and redistributed it. So I think to date, they haven't done that as much with public companies, but like the fact that it exists at all is concerning to me.
I may be incorrect in saying this, but wasn't the Ant Financial thing, the reason why he took it out is because he was scared of the government clamping down on them owning a financial entity within Alibaba?
Yeah, that was what he said. He said that there was a law that said that foreigners, if you were foreign owned, you could not own, a company that was like systemic to the financial system, let's say. Now that law never got passed, right? So like he said, we are doing this, and maybe he just preempted it and it just turned out to be his benefit. You know what I mean? And he was the victor because he took quick action, and on accident, the law never got passed. But at the same time, like if I was a shareholder of a company and you carved out possibly the most valuable piece of it for a law that never actually got passed, I would literally lose my mind. You know what I mean? Like,
Yeah.
obviously sue them. I don't know that anyone ended up suing Alibaba for that, but to me, it was egregious. You know what I mean? In retrospect.
Yeah.
We're just going to take a quick second to talk about the Quartr app. Quartr is a new way of doing company research. Their first mission is to enable access to conference calls, investor presentations, transcripts, and earnings reports as frictionless as possible, straight to your pocket. Their second mission is to create a completely new way for companies to reach their investors, and vice versa, to change the way people look at investor relations. Their initial core product is now available for both iOS and Android, but stay tuned for additional features during the coming year. Quartr is 100% free. They include companies from 15 markets today and plan to add more during the year. They prioritize requested companies, which you can easily do within the Quartr app, which, as I've talked about before in other past podcasts, with Heritage Growth Properties, it only took me maybe maximum of 3 hours for them to get back to me and have it on that app as soon as I requested it. They have a lot more in store for the back half of the year, so make sure to go follow them on Twitter at Quartr_app. That's at QUARTR_APP. Again, that's QUARTR_APP. Thank you very much, and we'll be back to talking with Phillip. It's definitely something that, like, Jake and I have both looked at. Okay, is Jack, like, what's our initial thoughts on Jack Ma, as well as Daniel Zhang, the CEO now? Do we feel that they're in the right, their interests are in the business, even though that their slogan is like customer first, then employees, and then shareholders? So there's a lot. I mean, the 20F that just came out today was 600 pages. So there's a lot of information within this, and reading in between the lines, probably another 300 pages technically, speaking.
Yeah.
So we've taken some time. We haven't taken a crazy amount of time on the actual, what are our thoughts on Jack Ma, because he's not that significant really in retrospect to Alibaba anymore. We've kind of shifted our opinions more onto, or taken our time and looked more into Daniel Zhang, and who he is as a character. Do you have any thoughts on him?
No, I really don't. I don't know him that well. You know what I mean? I'm not going to prognosticate on how he's developing Alibaba's business. You know what I mean? Because it's not something that I am seriously thinking about investing in, so I have not dedicated the time.
I was talking, just considering if he was to try to roll out some thing in like a scummy way, similar to what Jack Ma, I was thinking if maybe you looked at more information around that or not.
Yeah. I feel like things have kind of been cleaned up. You know what I mean? Post going public, I think when you have millions of international shareholders and your company's worth that much amount of money, there's a way bigger spotlight. It's harder to do things like that. But at the same time, I'm not going to put it past anyone. I mean, plenty of horrible anti-shareholder friendly stuff happens in America. You know what I mean? So it's not really different anywhere else.
Yeah. And also, just to go off that, Jake, I mean, I really can't speak for Jake, but my consensus is that it's so publicized in the news for having possible fraudulent accounting, fraudulent management,
everything,
and technically just fraudulent in general.
Everything, yeah.
Since it's been so publicized, plus there's been some of the best, I would say, some of the best investors accounting wise, looking at those financial statements, and like such as, I mean, everyone knows Charlie Munger, but then Greg Alexander is a really big shareholder. He's got quite a bit into Alibaba. So I do have a little bit of trust in those guys, to a degree, to say, hey, those guys are definitely smarter than me. I feel that they would have understood if there was fraudulent accounting before most people would have. What are your opinions on the fraudulent accounting? Do you have any? Do you think that there is? Do you think that there isn't?
I think there is. So it's funny you bring that up, because it's like the best discussion. I love pushing people's buttons on Twitter. You know what I mean? Because Munger owns it. So it's like you have this whole crew of like lifelong Berkshire guys, and you just push their buttons so easily by talking about that. But I mean, so there's one guy, Stephen Clapham. He's kind of a forensic accountant. He's looked them over, couldn't really understand what was going on. Kyle Bass, which, you know, if anyone knows him, you know what he's going to say at all, but he's a smart guy. But then you have Chanos as well, who kind of came to the same, or came to a kind of a more, I guess, aggressive conclusion. I think he was saying in that Alibaba had some of the not offshore entities, but like off balance sheet entities that are typical in companies, you know, faking their accounting. So there's a lot of smart people that have said that that's happening. And there's a lot of smart investors who are investing in the company. In my opinion, I think that there's a middle ground in that I fully believe that Alibaba's faking their numbers to a certain extent. But the question is by how much? The question is, does that mean the business not real? Does it not mean that it's not worth the current market cap? You know what I mean? And I think that that's the really hard question to answer, is that there's plenty of companies that are aggressive on their accounting. And I think Alibaba is one of them, but does that mean the companies, you know what I mean? Enron, I don't know how anyone could ever tell that. It's just, yeah, I don't know. I'm not smart enough to answer that question.
No, that's fair enough. You know, it's a lot better to say I don't know, and then saying like I think I was talking to Thin Stock Poppy about this. I believe so. Maybe it was Sleep Well. But they were saying like they're not really sure. I asked them a question, and that's a lot better than just saying some thing over the mouth that try to make them sound smart or whatever. So no,
Yeah.
a lot of people.
I don't know much, so it's I don't suffer from that delusion that I really know that much.
Oh, well, that's good. That's good, I guess. So I guess to finalize the Alibaba discussion, why is it that you have a small long position, instead of having even just a small short position or a bigger short position?
Yeah, I would never short that company. I'll be fully honest. I was like one of the people who realized that GSX was a fraud. That was like one of the China EDU tech companies. I think it's literally trading at $3 today.
Mm-hmm.
I think I realized that it was a fraud in 2019 or early 2020. And I shorted it for a long time. So if you know, just go look at the chart. It existed for a very long time. It still exists to this day, but it was one of the stocks that Bill Huang was pumping to the fucking moon, right? Like this was a stock that I think IPO'd at like $15, got bid up to 150 in early 2021. So luckily I was out by then. I had quit. But it's kind of similar to the Wirecard guys as well. People who realized that the company was fraudulent so early, they ended up, if you held all the way to the end, they like lost money or just barely broke even. You know what I mean? It was a horrible experience. So I had that experience for myself because, you know, it was one of the most egregious frauds, in my opinion, that had ever been on a public market. And it was getting pumped to the moon. And that taught me a lesson, which was, if there's a company that's literally fraudulent to the point where they might be making up the numbers, I really can't be shorting that company unless there's a literally verified catalyst as to why that's going to stop. Because if you're faking your numbers, there's no reason you shouldn't just make them even better. You know what I mean? Next quarter. And everyone's just going to lap that up, you know? So
Yeah,
I would
exactly.
never short Alibaba based off fraud accusations. I would never short, you know, any of these companies off fraud accusations that are kind of like more foreign to the United States. If you actually have real auditors and they might be checking your bank accounts and your cash flow statements and things need to tie, maybe then I would, because you can kind of see it in the accounting. But apart from that, I'm not going to step in front of that train at all. But yeah, so barring that, I feel like the kind of answer is pretty simple. If Alibaba is what everyone thinks it is, and it's growing at 25% a year, and it's at a very reasonable multiple, and that occurs over the next 5 years, people who hold and nothing wrong happens are going to do extremely well for themselves. And that's a very likely possibility, probably the most likely probability. So that's why I'm betting on it. But I have to acknowledge, I think there's a significant tail risk probability associated with the company at well, which is why I'm not betting too much on it.
Very, very fair. To a degree, as I guess idiotic as it does sound, to a degree, I am also kind of betting on trust in humanity.
Mm-hmm.
Do I think Jack Ma would let somebody such as Daniel Zhang, or even if Jack Ma's even behind it, and say that he's not really a part of it anymore?
Mm-hmm.
Do I really believe that he is a fraud? He's had this whole thing since 99. He wants this 102-year-old business. So like technically he wants the 3-century business.
Uh-huh.
Does he really think on the 20 years into the 102-year plan, is he just going to keep on doing fraudulent work the whole next 80 years?
Yeah.
That's where it's like, I have trust in the system to a degree, and I have trust in people as well as Jack Ma. I mean, I've never spoken to him or Daniel Zhang, but I've watched multiple interviews, which means nothing in retrospect. But that's kind of another consensus that I've brought, is like, you know what, I got hope in the system. Obviously, the financial system's not correct 100% of the time. There is frauds out there. So it's just, I guess, believing in the system as well.
Yeah. No, I think that you're right. And to be honest, I'm going to tell you something. I think of myself like, and I think one of the reasons I've had a lot of success shorting outside of GSX is like, I feel like, you ever seen Carson Block do interviews, the guy behind Muddy Waters? I seen him on TV. He's on CNBC. He's like, sell side research is toilet paper, shit on that. He's just like absolutely just reaming these people out. And some of it's justified, but he's just kind of a super big asshole. He's super critical. Doesn't mean he's wrong. I feel to a very large extent that I'm very similar to that. Like, I'm hypercritical. I see these companies putting out these press releases. I read their 10K. I'm like, literally disgusting. I can't even believe someone would be saying that, because I am just such a skeptical person. And that has absolutely destroyed my investing returns, because I really do, like Bill Miller, it pays to be an optimist, in my opinion. And that's like the one reason why I have 20% of my portfolio in Swedish Match, is because when I discovered it in 2019, I felt like it was already in every gas station. You know what I mean? It was already this big. How is it going to take share from Juul? How is it going to displace cigarettes? Because in my opinion, if you smoke a cigarette and you throw in a Zyn, a cigarette is a better way to deliver nicotine. You know what I mean? It's a better buzz. So, you know, if you're someone who's focused on the downside and you really don't have this optimism to a product or to a company or to a management team, you're never going to be able to have faith and hold on long enough to really see good returns. And I've realized that over the years because I've made that mistake. So I think you're very right for believing in that. And like, if I had to bet in 5 years, if we look back, I think you'll be right in what you're saying right there.
I think so too. And I think that in order for humanity to continue on, you almost have to be an optimist on most things. Obviously, there is certain companies out there that are probably a bit fraudulent, and that's where you come in and you short them. But for the most part, you kind of have to, if you think, you know, humanity, the economy will move on.
Yeah, I think that's one of the reasons why I'm long Amazon. Like, you know, as someone who was an economist for a long time, and, you know, if you know anything about that, for a very long time, up until about 3 years ago, there was really high, they called it structural unemployment. So people thought NAIRU, the natural rate of unemployment was like up to 5.5%, 6.5%. It was never going to get lower. All these reasons why there was so much unemployment in the economy. And it just was very bearish on how the economy looked. Growth was slowing. In 2018, I think, or maybe it was 2016, there was like a mini industrial recession. And I remember listening to Bezos, and someone asked him about jobs. And he was like, no, you guys don't understand. There's actually not enough people for the amount of jobs, for the amount of things that we need done for humanity. And I was like, holy shit. Like this guy, like Galaxy Brain, he's got so many ideas and he's going to plow so much capital into business opportunities that he's like, there's literally not enough people to accomplish like what I want to do. And like, you know, I'm not going to say it was that, but like over time, hearing things like that and realizing things can be way more optimistic and better than I ever thought or anyone else ever thought is, I think, pretty much the best way to play it. Maybe you don't want to get too crazy on how you invest according to that, but I think that that's the correct opinion on things.
And I think that kind of goes back to why, I guess, crypto is taking such a massive swing through the last couple of years is the optimism.
Mm-hmm.
And I think it's very important to be pessimistic and to say no fast when there's things such as social competence. You don't see the proper valuation on the actual business. You know, it goes back to Munger, the no man, right? But yeah, to a degree, a lot of people are very optimistic about crypto, and then it can get to crazy valuations, and then people can get sucked on it, I guess.
Mm-hmm.
So it's, yeah, to a degree, you want to be optimistic, but also you want to have the right pessimism. So
Yes.
I'm very pessimistic at the start, and then the more I read up on a business, then I get more optimistic. But then even today, like I tweeted out like 70 more bearish write-ups on Baba because I'm getting too optimistic. So I want to get stumped down instead. I'm not like going out there going like a madman, just hitting buy, and every time that it drops $1.
Yeah.
This guy over here being super bullish when the thing's dropping.
Yeah, someone's got to restrain him. Sending out tweets. Explain to me why I'm not 100% Baba right now. It could be a good idea. I don't know.
Come to the podcast next time and I just get an Alibaba t-shirt on.
Yeah, I know.
Yeah.
We're gonna get your Baba hat.
Get the Baba hat going and everything.
Yeah.
No, but
I actually have someone made me a sweatshirt, like a hoodie, and it straight up is just a picture of Jeff Bezos on the front. That's how much I fucking love that guy. So we're gonna get you one of those with Ma on it.
No, I just finished the Everything Store by Brad Stone. He's the author of Amazon Unbound, but it was the first book I think that came out. I didn't realize how crazy of a man Bezos was, and like he would just outwork anybody. Like there'd be people like coming over from, I believe it was Microsoft. Don't quote me on it, but people coming over from Microsoft, and they would have been working crazy hours, and he was like, yeah, like be prepared for crazy hours, and like yeah, and then all of a sudden they're just like, yeah, like, I can't deal with it anymore. Like you're too insane.
Mm-hmm.
I think he's one of the harder workers to almost ever live in the modern age. And I think that's a lot of it has gone to his success.
Someone proved me wrong that Jeff Bezos hasn't created more value than anyone else in humanity.
And you still see people online hating on him.
And they hate him.
Yeah.
Like in all honesty, like the shit that Jeff Bezos has done and the amount of success that he's had, whether it be Blue Origin or AWS or just Amazon itself, like it blows my mind that one human being could be so successful. Like, did you guys see that interview of him 21 years ago on the Charlie Rose show?
I've seen it crossing around Twitter lately.
Yeah. He's like, Charlie Rose is like, if you could do one thing instead of running Amazon, mind you, mid-tech bubble, he's like, what would you do? He's like, I want to explore space. It's like, he literally ended up just like making Amazon and then funding a space ambition that he openly said he was going to do 21 years ago. Like, literally the first person in humanity to do that. It's incredible. I don't know.
And also, I mean, I'm a very frugal person, same with Jake, and I'm guessing you are, just being an investor in general. You turn out to be pretty frugal over time.
Yeah.
But I mean, you've seen the clip probably of him driving his, was it Honda Civic or Honda Accord, worth $10 billion to $20 billion at the time, and he goes, "That's a perfectly working car." Was that, sorry?
His desk was plywood.
Yeah.
His office is like a picture of him. It looks like an absolute dumpster fire of an office, and he's just sitting there on his little computer, all happy.
And that's where it goes back to like the great capital allocators and the great managers is frugality. You know, Buffett, and if you read the Outsiders, the 8 unconventional CEOs, most of those guys, I don't think any of those guys had. If you go to the top richest people in the world, right? If you go to, you know, Zuckerberg, Gates, I think the nicest car there might be $100,000 type thing. Like Zuckerberg doesn't even have a bed; he just has a mattress, right? So
Just floats.
just floats in the water.
Up in his, he's a UFO up there, alien.
I have that book right there. I haven't started on it yet, but I agree with you. And I've seen that in my own business career. Cost efficiency is like one of the most underrated things that could ever happen for a business. And it like allows you to reinvest more capital. And, you know, as long as you're not absolutely obliterating your employee morale, it's really good for a business. You know what I mean? Especially when the executives aren't the ones blowing all the money. But that's like, in my opinion, shout out to Andrew Kuhn. Andrew Kuhn and Geoff Gannon, they're the ones who started preaching that to me and kind of made me realize how important it was. I don't know if they're the same guys who got you, but cost efficiency is a crazy important component of businesses, at least on the operating side.
Yeah, those guys have taught me, like, I've sat down for hours and I'll just go click, like, play for the next one, for their podcast. Those guys have an insane podcast. And their write-ups that Jeff does is amazing.
Was Bezos, was it you telling me, Mitch, that Bezos used to take out like the lights to save like $5,000-$10,000 at like the vending machines or something?
I've never heard that.
He took out some type, I believe it was him, that he took out some type of light source somewheres that they didn't need them. And I want to say it was vending machines of some sorts. Don't quote me on it, but I did read it in a book somewhere, so that Bezos took lights out of some area that didn't need them. And I'm guessing it could have been vending machines. But he just took them out. He just took them out just to save a couple dollars.
It's wild.
So no, it's you know, it's one of those things that you don't see nowadays a lot, is frugality and making sure to cut your costs as low as possible. But looking back in history, those are what it doesn't make the best managers, but a lot of the best managers are very frugal, and a lot of them are buying massive jets and, you know, expensive clothing and jewelry and all that stuff. So,
well, you know, there was Jeffrey Emmelt. He used to fly 2 private jets together in case one broke down. He was great.
What
That's an exception.
What was he managing of?
No, I'm just kidding. That's the guy who was CEO of GE before it started to blow up. But he did do that. They would fly 2 private jets together in case one like needed repair work while they were up in the air. They'd land one and get in the other one. Like, that's such a slap in the face to your employees. You know what I mean?
Especially the ones that are getting, like, you know, just over $10 an hour or whatever it would have been.
Working their asses off for you.
Yeah.
You can fly around in 2 private jets at the same time.
Well, because like if you read up on Buffett when he initially bought Berkshire Hathaway, and he said the management beforehand, Seabury Stanton, is that what his name was? He said that, or Buffett said that the secretary had a secretary, and so then he's like, as soon as he walked in, he's like, yeah, this is what I need. I don't need anything like that. It took till the 90s until he even got a jet, and Munger refuses to even go on the jet, I think. I'm not sure if he still does to this day, but yeah, I don't think he's gone on that jet that often.
Yeah, I know he said it was a time thing for him. That level of waste, though, in corporations is Very, very typical.
Mm-hmm. Yeah, like, if you read what's Too Big to Fail by, what was his name? It's on CNBC.
Andrew Ross Horgan.
Yes. And just the amount of CEOs that are in that book during a financially 2008 financial crisis, and they're just flying planes left, right, and center, and all that. So it proves to the point, like, to a degree, maybe the management, if it really works out mathematically, like, I think Buffett probably should have a jet by now, based on the fact that he is, just over 90 years old. And
Yeah.
if it saves him an extra couple minutes instead of waiting in an airport, then as an investor in Berkshire, I'm fine with that.
Yeah.
He did have one, I believe, and then now he probably uses NetJets, doesn't he? I think.
You'd have to assume.
That's what
I
I'm
think
guessing.
he uses NetJets, but he had a jet at one point, and I think Charlie kind of made fun of him for it, if I remember correctly.
Yeah, I've seen a couple clips of him making fun of him. I forget what they call it. Something indefensible.
Indefensible. Yeah.
Is that what it was?
That rings a bell.
Yeah, I remember hearing
You guys
that.
are about to lose your invite to the annual meeting if you don't remember that.
What's that, sorry?
The Berkshire history.
Yeah.
Oh, man.
Are you a Berkshire shareholder?
I am, yeah. I sold most of mine in earlier this year because I was concerned about the dollar. Just having so much of my wealth in the dollar when we're printing so much money. It's a macro call. And when does anyone ever do that correctly? Never. You know what I mean? So it's shame on me for making that trade, but I did it. And that was my reasoning. So.
But you still own a little bit just because?
Just so
Yeah.
you go to the meeting?
Yeah, exactly.
Yeah. That's kind of, Jake owns a little bit more than I do, but I own, I think it might be a 2 or 3% weighting.
I got it good right at the bottom of the pandemic, so I kind of just held type of thing.
So you guys want to hear something? So Mitch, I think I told you this on the phone a couple days ago.
Mm-hmm.
During the pandemic, I'm someone who, there are certain people who are investors who are long short and they have short positions. And when the market starts to fall apart, they lighten up a little bit and they roll that into like long positions, right? Because in my opinion, that's a good strategy. I had a large position in gold using the same thesis that, if things kind of started to fall apart a little bit, gold was going to go up. So at that point in time, going into February, I was buying some VIX calls, which didn't quite work out for me, but I was very worried about the pandemic. But I was like 20% gold. So I think on like March 6th, gold was kind of like peaking. I sold all my gold and I was like, okay, what am I going to roll all this into? And I was like, it's got to be something safe. So I was like, just going to go long FANG. So I was like, the question is, do I roll it into call options and really put my balls to the wall, or do I just buy the equity? And I deliberated on it for about 2 days. And I eventually ended up buying a basket of FANG, but only the equity. I was like, in retrospect, if I had, really decided to take some risk, that would have been quite the payout. But so it's so obvious in retrospect, but how would you know back then? Miss out on a small fortune.
I wouldn't even call it omission to a degree, because technically it is, but it really isn't. It's just like the path that you chose, or I guess like technically just the security, or the way that you actually chose to buy the security.
Yeah.
So you're right on your call, but just you could have made a little more just on a different vehicle to put the money in. But
we have a friend that kind of took action on your plan during the pandemic, and he cleaned up pretty good. Oh yeah.
Some of the shit codes. What did he buy?
No, he bought like all the FANGs.
Oh,
but he bought calls on them during
And
the
then-
bottom.
And then he's buying like the SQQ, that like the short.
No. He was at the he bought the TQQ.
No, but on the way down.
Oh yeah, he was buying SQ on the way down, and then he was
He was
buying the TQQ on the way up.
I've never seen something like this. And this is like initially like when Jake and I are just kind of like starting to learn. So he shows up to our if you haven't listened to our,
This is before the pandemic though that we started talking to him, and then
he shows up to school. So Jake and I are in college.
George Soros goes to your school.
Yeah, he sat right next to Munger and Buffett, and he was weird. No, we talked about it in our first podcast of how we got like really into investing. And so this guy, his name's Mark, and me and Jake are in our first year, or was it first year, second year, first year,
Sure.
first year of
First year,
college. And like, so we're starting to look into like, all right, we'll start looking into Warren Buffett and investing. And, you know, I watched some like personal finance YouTube videos and stuff like that. So we're really just getting a broad understanding. We might have been a couple weeks into it, right? So this guy shows up and he goes, yeah, oh, you guys, like, we were looking at some type of chart. That's what we were looking at. So he's like, oh, you guys are into stocks. And we're like, oh, yeah. So the first day he goes and shows the teacher his portfolio of what he's doing that day. Cause like that day, I think Dow was down maybe 1.5%. And the teacher's like, oh my, like our accounting teacher's like, oh my God, my ETFs are all down and blah, blah, blah. And so Mark goes up and he goes, oh, I'm buying SQQ and I'm short TQQ and all this stuff. And he's just shorting the market. And he goes, yeah, like, look at me, I'm up, 4 or 5% that day. And he's like, okay, whatever, man. So then after school, me and Jake are like, yeah, like this guy doesn't really know much. Like we probably know more than him. The next day he goes and tries to show me like over the money option contracts that he's got going for like
he's speaking like Greeks and stuff. Like it was
he's speaking like Greeks on the first day. Like I'm barely learning market cap at this point and PE ratio, and it's just like that's
freaking Rain Man's explaining how you guys should make a couple $100,000.
Oh my! And he's showing me like the Iron Condor.
Okay.
Like he's showing me Iron Condor. He's like, oh yeah, you'd be able to figure that one out pretty easily. I'm like, man, like I'm. So like after that day, then we're just like, okay, well, we'll do value investing and fundamental analysis, and then you stick to options, and then we'll kind of discuss our different plans throughout the pandemic. But no, I mean, we both did fairly well throughout the pandemic, and I wasn't able to time the market because I wasn't even technically legal enough to buy my own stocks at that time here in Canada. So I just turned 19, like pandemic was March 2020. So June 2020, I turned 19. And then, so Jake, you bought some Berkshire and did fairly well within March 2020. And then June 2020 was when I started, or July 2020, sorry, was when I was buying Berkshire, and I just held it since then.
Nice.
Yeah.
How's your buddy's retirement? What's he plan on doing?
Right now, I think the latest that we've heard, Jake, you talk to him a little more often than I do.
Yeah. So basically, he's still doing great. He's probably beat all of us by a lot. I'm not sure about your returns, but like he's probably beat most of FinTwit actually over like the last about 2 years now. But if volatility ever kind of subsides a bit, I think his strategy and options might come to an end, and then you'll have to figure out another way. But as long as volatility keeps up, he's going to keep killing it, I think.
Yeah. It's like I had some friends. I don't know what time frame it was in 2020, but everything started to go haywire after COVID. But he was like pitching me uranium penny stocks. You know what I mean? I was like, shut up. I was like, why don't you put your money in this? Like freaking 10x his money in like freaking months. I was like, have to listen to him, brag about it for so long and talk about how smart he is. Like, sick dude, real sick. Can't stand it.
But just like everyone that got rich off of like Dogecoin, like at the time, and then like you had Bitcoin, and people were like, yeah, like I'm super smart at like crypto. It's like you didn't know a thing. You just got lucky. Like, come on.
In August, I was on Reddit. I read the original post on GameStop, or one of the original posts, after Ryan Cohen comes out and everyone starts talking about it. I bought some GameStop call options. They must have been $5. You know what I mean? And they like expired at the end of 2020 or something like that. And I like calculated out, You know what I mean? It's like lost, or I could have made 50 grand. Like just incredible what was going on the past 12 months. And like people don't even really appreciate it necessarily. But yeah, crazy stuff.
No, for like that, they're like 2 weeks that, what was his name? Roaring Kitty.
Yeah.
Like when he went through like the testament or trial or whatever it was that he went on, versus Vlad and all that stuff. Those 2 weeks are probably the most exciting 2 weeks to be a stock investor in general.
Yeah.
Just
You have
watching the shit
You
go
have so
down.
many random people that just like, I'd say like out of all my buddies, like uh, they would come to me for stock advice or whatever it might be. Like, okay, I'm interested in this. Why is it a bad company or why is it a good company? And so then I had like hour-long phone calls with just like people that were never into stocks beforehand, but they're like, explain to me the situation. I want to know how this is possible. How can I get onto the next GameStop? What is it? And
Yeah.
I don't know, buy Berkshire and hold it for 20 years, and then like get a percentage of that GameStop.
Yeah.
Well, we actually had a buddy who bought GameStop, and he had never like learned anything about investing before that. And he had bought GameStop, and he bought it at a pretty decent price. And I think it got up. What did GameStop get up to? $500-600 a share at one point, was it?
I think it was just under $500.
So yeah, whatever it was at the peak, whatever he had bought it like below $100 at some point. I think it was like
$80, I think.
50,
real
80.
steal.
Anyways,
Yeah.
yeah.
just
So
an
he had
absolute
bought it,
steal.
right? And every day we tell him, like this is back when it was up like 350, 400. Every day it was climbing. We were like, sell it. We were saying, sell it. And he'd say, no, we'll just wait like a little bit more. Like the guys on Reddit, like they're telling us not to sell. Like we got to
Yeah.
huddle here.
What was it called? Diamond Hands? Is that what it was?
Diamond hands. Yeah.
Diamond Hands.
And then the day it dropped like big at one point, like he just didn't show up to class. Like it was like the worst thing ever. Like he was pretty well in a depression for like a week. Like it was awful for him.
Interesting. You know, the to a smaller extent, there was a GameStop, but I feel like honestly, the crypto people, when I hear them talk about crypto, it reminds me of people trying to get me to worship their religion.
Yep.
Like that is, and just like GameStop, when people are making these pitches, I don't really think that there's any fundamental like reality based like pitch to those things. They're like literally it's a belief based, movement based system for both of those. So I don't know.
My one like comeback on like people that say like, oh, this thing's, the quote you've probably heard multiple times, going to the moon, right? And I said, okay, where's the valuation? Like, how can I actually like value the coin? And then like, oh, I
Do you
can't do
want to
that.
value that, or do you want to make money?
Yeah, no, exactly. and then they put their hands in like a triangle formation, and then you're like, okay, I think this might be a pyramid scheme. Somehow it's a pump and dump.
Oh man.
Yeah, you put the connecting lines together.
Do you think it was the hedgies that were kind of blowing up the shorts, or do you think it was the actual retail investor?
I think it was both.
I think it was both.
Yeah, I mean, like if I was a hedge fund manager and I think what people have learned, like for example, in the case of GSX, is there was literally a fake company and you have tons of people shorting it. There was one guy who had a significant amount of assets who can just go in and buy, I don't know what he was buying, but let's just say both the equity and out of the money call options and literally blow everyone else up and make an insane amount of money. That's what you're going to do. So I assume it had to be a very similar situation where you have retail investors deciding, I'm going to start buying this, and the algos are feeding off that. And some of the smarter hedge fund managers are like, yeah, absolutely. Like I'm also going to get on this game. So it all seems like a very positive feedback loop in terms of like bidding the stock up to like as high as physically possible.
Yeah, it was one of the most bizarre things I've ever seen. And I mean, I've only been in the markets. I started investing when I was 13 in mutual funds, but all in all, I really wasn't in the markets until the last couple of years and researching and stuff like that. But it was the most insane thing ever because they're like for an example, if you know who Logan Paul is,
Mhm.
like Logan Paul's having this guy on that week talking about Bitcoin and Bitcoin, and as well as GameStop, the short squeeze, and then Wall Street Bets, which is his podcast is nothing to do with finance at all.
Mhm.
So then I was like telling people are asking me all the time, like, hey, should I have gotten into GameStop? Like, should I get into GameStop? And I'm like, when Logan Paul is having people on to talk about GameStop, that's when you sell. Like, I
Yeah.
think that's a peak in my opinion. And I think it still will be for anything. Was it John F. Kennedy's father that said something like, when the shoe shine boy is pitching you stocks, that's when you sell.
Mhm.
And so I guess Logan Paul was the shoe shine boy, or anybody that was talking about GameStop at the time. And same with Dogecoin. Like, I think when you have guys on Twitter that know nothing about any type of shitcoin or Dogecoin or Ethereum, Bitcoin, NFTs, cyberpunks, whatever that the case is for that week, when the people that know really nothing about it, such as Kim Kardashian, then I just think it's like
Such as Kim Kardashian.
well, like
Whatever.
When did she shill?
she says something that she's, I don't know, it was a couple of weeks ago, she put on her Instagram story saying that she is super passionate about the crypto space, and then there was some type of crypto coin that she like said, like, here's my link.
Nice.
And I was like,
whatever Jim Cramer says, you do the opposite. Same type of thing.
That guy. His recent takes, people and getting on him about that, especially Didi.
the Didi thing, that people should have made TikToks in that one. I've seen a couple of them, and those are when he's like, oh yeah, he's like, I'll take all your money, put it into Didi. 2 days later, oh, you don't want to touch Didi, like whatever. I don't even know the actual quote that he said, but
Yeah, I don't know why he does that, especially for someone who's always on CNBC, like at least partially being like, yeah, these Chinese companies, I don't know about them. You know what I mean? He's kind of that guy. Then he always goes out there and kind of shills for some of them.
Makes for good TV.
Get it?
it makes for good TV. But I don't know how where's the regulation on that? Like, how can he go and say, like, because I mean, he says none of it's investment advice or anything like that. But I mean, he goes out and says, oh, I take all my money and put it into XYZ. I don't know how that's even possible. Like, I don't think me and Jake, even on our podcast, I don't think we've ever said, oh, I would go out and buy this stock now. I don't think I'd even like, even as not even a recommendation, but just saying like what I'm buying currently, just to stay as far away from the SEC as I possibly can. I mean, or the OSC in Canada, but
Yeah. I don't know. I don't think anyone's too worried about them right now.
true.
But on that subject, you know, I know you guys are in Baba, Heritage Growth, Berkshire. So you guys got 2 or 3 more. What in the market right now is piquing your interest? And you can't say more Baba.
No, as much as I'd
You
like
go first,
to.
Mitch.
I just turned my hat. There goes Bubba. Just like a draft day on college. But what's piquing my interest? A couple more positions that I do have that I haven't talked. Like, I mean, it's boring, but like, what piques my interest is Equitable Bank, which is a Canadian bank, which is similar to Ali Financial.
Yeah.
That one still piques my interest. I've been reading up a little bit on Constellation Software, just because a couple people have hit me up and just said, like, hey, you're Canadian, it would kind of fit your portfolio. It seems like it'd be in strict competence. The more I read up on it, it's like it seems really interesting, but like, I do need to learn a lot more before I'd even think about buying it. I don't even know if it's even worth, like, with the valuation.
Mm-hmm.
Well, there's Bomb, right? We like Bomb.
Boston Omaha. We did a write up on Boston Omaha, which is a holding company, which, I mean, I'm still really interested in. Right now it's selling at $32 a share, give or take. I wouldn't be too interested until give or take 25, maybe. I'd even think about looking at it.
Well, I mean, if you want to get back onto the China and like the foreign companies, I think Process is kind of pretty interesting right now to get the 10-cent exposure at a discount. But I tried reading, like, when they have these complicated, like I know like the VIE stuff's complicated and stuff, but I don't want to keep looking at complicated stuff. So the whole share swap exchange between Naspers and Prosus, like I don't want to wrap my head around it. I don't want to worry about it. So I'm going to stay away from that. I already have enough exposure to Asia through Bubba.
No, I read that and almost went cross-eyed, and I was like, okay, so take a
Yeah.
couple steps back. I need to get something easier than Bubba. That's what I'm looking for now, is something that's right in my wheelhouse. Like Bubba was a long swing. Like if it goes back to like the analogy of like sides of hitting, it was, that one was in the, it wasn't really in my wheelhouse, but it was a perfect slow pitch.
I have a kind of unpopular opinion
To
right now.
Sure.
I think Berkshire's at a pretty good price right now. And I know that sounds crazy, but I don't think so. Because let's say the market does continue to go crazy, right? And inflation, continues. They do have a lot of cash. They do have some pretty cheap debt though that they're able to use. But they have a pretty big stake in Apple. And did you see Apple's earnings report today? They have a pretty good outlook going ahead. And if the market does crash, they have a good cash position. So I think over time at this price, it doesn't look too terrible. What do you think?
Mitch?
me, I'd say, see, I mean, I get the text messages of, man, we should be buying more Berkshire. We should be buying more Berkshire. This is stupid for us not to buy it. So, it's not new news to me, I guess. But
I'm not saying you get 20, 30% returns or anything, but I'm going to say
No.
you're probably going to beat the market going to Berkshire. Well, actually, I had claimed a few months back when Berkshire was around 230-ish, that over the next like 7 to 10 years, you probably beat the market in Berkshire at that price, because I think the SPY was trading pretty high at the time too. And the way I worked it out was you would have to bet on no multiple compression in the SPY. So that seemed like a pretty good probability to me, but
I think I'd be more inclined to be buying Berkshire now than I would be the SPY. That's my
I think that's
consensus
pretty
on
fair.
it. Whether or not, I'd say Berkshire is better than cash, but I'm enjoying my cash position, even though like it is better probably than cash. I am enjoying my cash position more than buying Berkshire, because I think there's more opportunities out there with my cash. And so I'm just going to have to take, if I bought Berkshire, just more of a short-term bet on them. And then I'd be ripping the cash back out from them and putting a different idea. So,
Yeah. I like that. I was just telling Greenwald about that, Jason Greenwald.
okay. Great guy.
Because I was using Berkshire as a cash position as well. I stole that from someone else, but it really just makes a whole hell of a lot of sense. You know what I mean? At least in my opinion. But are you guys familiar with Chris Bloomstrand?
Oh, yeah.
Yeah.
Okay. I was going to say, like, you guys are like, I think Berkshire is a good price here. Like that guy, you just go and listen to him, get the full rundown. You know what I mean? You learn, his opinion on how to value it. It's like, the most intensive Berkshire analysis that, you could do. And he just hands it to everyone like almost every year in his annual letter. So, I think, assuming that, you don't think the dollar is going to depreciate, Berkshire is a super, super good business. And I'm sure there's someone smarter out there who would tell me, even if the dollar does start to decrease, Berkshire would be still an incredible business to own. But most of their assets are very domestic focused, other than, I guess, Apple.
Yeah.
They have I think a lot of their business, even Buffett kind of talks about it, would kind of work pretty well if inflation were to persist. It would be able to, pass on that cost to the customer pretty well. So that's what I kind of seen. Like I was like, a business probably does pretty well inflation. Are you kind of nervous about inflation going forward still, or what's your kind of take on that?
No, I'm not really. Well, so here's my thesis. I haven't even checked the dollar recently. I think it's been going up, so consider me an idiot. But my thesis, like starting X amount of time ago, was that when you have essentially so much money being printed by the central bank, but so much money actually being like distributed by the federal government, which is much different than, you know what I mean, prior years, which they're literally sending people checks. There's so much money going out into the system. Like essentially what that means is there's going to be an oversupply of dollars. So the value of the dollar is going to fall internationally. And when that happens, your imports are going to get, you know, incrementally more expensive, which does mean inflation. Now, when you're an import-based economy to a certain extent, like you are, you know, in America, if your import prices are rising significantly, that's really bad for your economy. If your economy starts to worsen, you know, theoretically, your currency is also going to start to fall. So like I kind of saw like potentially we're on this path where we're going to be printing so many dollars, or, you know, some people get offended by the word printing, but the market is going to be supplied with so many dollars more than demand. The value of it's going to drop, and that's going to create this negative feedback loop. So that was my thesis. I don't think it's really played out that well. You know, typically things like that take years to actually play out. But yeah, I'm not really concerned about the inflation necessarily. I'm really more concerned about that. And that's why I sold my Berkshire and tried to start investing more internationally, and especially in some markets that I thought were pretty cheap, like Russia, Poland, Indonesia. There's, I think, a lot of good companies in Sweden. I just want to start allocating my capital more to places like that. And, you know, typically if you are on Twitter, you'll see people essentially just shit on macro investors because they're always wrong. And they are always wrong. So I'm telling you this, but I really think that I'll probably be wrong in what I thought.
That's fair. I mean, makes sense to a degree. I understand your thesis for sure. I don't really like making macro calls privately, let alone publicly. Based on the fact that most times, anytime that I've ever thought something macro, I'm like, yeah, that's not, I mean, it hasn't really gone that way. So I should probably just invert anything that I ever said macro publicly so far. So, but no, there's even just coming from Canada, talking interest rate wise, I rarely look at the US to Canadian dollar when I'm buying a US or Canadian to US dollar, sorry, when I'm buying US currency and exchanging it, or US business, sorry, and exchanging it over.
Yeah.
It's just one of those things that I was like, I'd really not, if I'm going to start making decisions like, okay, I should probably wait until the dollar comes up a little bit, so then I can get it cheaper. So then hopefully the business or the stock stays the same price or it gets cheaper. Like that's just way too difficult.
Yeah.
So if I lose it on the dollar, I lose it on the dollar, whatever.
Right.
I'll just hold it. And
Yeah.
that's kind of my 2 cents on it. Is like, I can't, it's one thing to call one thing and to be right about one thing, but then it's extremely hard and difficult to be right about two things at the exact same time and make money off it. So
Yeah. That's a lot of people kind of have a similar opinion on Brazil, but just like the real just falls like every single year. So like you know, I feel like the Canadian dollar and the US dollar are kind of like intrinsically linked. Like there's kind of parity to a certain extent, but like no one wants to invest in Brazil because if you have a company that returns 7 or 10% a year and the real falls 7 or 10% a year, you know what I mean? You literally made no money. But I think at a certain point, you know what I mean? That opens up an opportunity, you know what I mean? In the sense that if they ever gain parity, there could be a significant amount of flows in there. You know what I mean? Once people aren't scared that the currencies are going to, you know, continue to lose their value. So,
yeah, for sure. Well, it's been great having you on. We don't want to keep you too long. I think we're just under like 2 hours now, which is the longest we've been so far. So
We did a Bill Brewster podcast, man.
yeah, did a Bill Brewster, did half of a Joe Rogan. But yeah, it's been great having you on. Where can people find you? Where can listeners find you at?
Find me on Twitter. My handle's at Wealth or Die. Might be changing that, but Phillip Martinelli on Twitter. DM me, reach out to me. I try to get back to, every single person that I can. So yeah, hit me up.
It's been great. That's how we got on and get connected with you. It was just through DMs. And so yeah, definitely go, and we'll put the link down below for your Twitter handle, just so it's easier for people to hit you up. And thank you very much for coming on today.
Sounds good. See you guys.
See you later.
See
Have a
ya.
good one. Thank you for listening to this episode of Money Under the Mattress. If you have any questions about this episode, you can email us at moneyunderthemattress.podcast@gmail.com. Everything discussed in this podcast is our opinion and should not be used as investment advice. This podcast is for your entertainment and education purposes only, and we hope that you enjoyed it.